I think this is a very good question, Jonathan. I think in order to answer this question, first of all, we need to understand what the Great Purge is, right? For those who haven't been following the Asian credit market for the past 24 months, the Great Purge is what the terms that we use to describe the government crackdown on the Chinese property sector during the last 24 months. And during this period, basically, the government introduced the so-called three red lines policy and basically limiting how much borrowing these developers can actually carry on their book. And the whole designs of these three restrictions were basically to limit how much they can borrow, right? Because if, for the audience, they are familiar with the Chinese economy, they may notice that in the past generation of leaders, China has been trying to growing the economy very, very fast, right? Every year. So when President Xi Jinping came to power, he realized that this is something just not going to be sustainable in a long-going basis. So therefore, he's just trying to rein in or limit of this because everybody knows a collapse in the property market will have a huge negative implication to the economy, right? So we see it in US, Japanese people seeing it, and even we live in Hong Kong, we have experienced this kind of meltdown too. So therefore, Xi Jinping government and also the Chinese government was trying to ring in this early and quickly, right? So at the beginning, to be very honest, many developers just weren't taking this so-called three red lines very seriously because they think, oh, I'm operating on a very important sector, which will cause systemic impact to the economy, and they think the government will go slowly, right? But then when developers realize that these three red lines were actually no joke, then it's already too late. And what we have seen as a result is a huge surge in the default rate because when all these developers realize it's already the market's already shut for them for getting money. So what we have observed in terms of default rate is a very humongous 70% of default rate in the Chinese developer universe, right? That's what we call as the Great Purge. Basically, the entire sector during the last 20 to 24 months just went through a accelerated detox program, if you want to call it that way. Yeah. So fast forward to today, people following on when Xi Jinping government, the new government came to power, assumed the leadership. Instead, in November, they introduced the so-called three arrows, basically is to replace the three red lines, right? You can think of the three red lines were the headwinds, but instead today, the three arrow becomes the tailwind, right? So what we see is all these three conditions were designed to basically unclog the refinancing channel for a lot of the developers. And in plain English, basically putting more money into their pocket on their balance sheet so then they can service the debt. And also if they have a debt comes due, they will be able to repay it or even refinancing through the bond market or the equity market. So to answer your question whether right now the market is investable, I would think that it is very, very investable. The bad days in terms of sentiment and also asset valuation probably is a thing behind us, right? So I think going forward, we are looking at a much healthier property universe. And in fact, in terms of quality rating, the cream of the crop developer, which is rated BB, that percentage has basically gone from 2018 for around 30% to right now almost reach 50% of the universe. And coincidentally, the weaker hand, the B or below, basically collapsed from 40% to 20%. Right? So as a result, the entire Asian high yield universe, and in particular Chinese property universe, has improved in quality. So I think right now, also because of the valuation, because of the Great Purge, for the past 12 and 24 months, we are in terms of asset valuation, we are talking about still on a 10-year historic basis. This asset class is still trading around 1 to 1.5 standard deviation on the cheap side, right? So if you believe that, the Chinese property sector will continue to recover, albeit on a slower pace, and also the Chinese reopening story, plus the very attractive asset valuation in terms of how much cheaper versus historic. I think right now it makes sense to look at this sector.